US equity markets made gains at the end of last week prior to the announcement of the European bank stress test results on Friday night. The European bank stress tests were designed to replicate similar tests done in the US last year to help reassure investors about the US banking industry. From these tests, only 7 of the 91 banks tested in Europe needed a total of €3.5 billion in additional capital in the event that another economic slump occurred or a major economic shock did come into the mix. This number did seem to be a little bit on the light side, and now investors are questioning exactly how tough and how robust these stress tests really were. The stress test results has seen the euro currency fall against most global currencies, including the New Zealand dollar, over the weekend. We are currently trading at 56.3 cents against the euro on Monday morning. With slightly stronger equity markets towards the end of last week, we have also strengthened against both the US and against the pound. We are trading at 72.6 against the US and 47p against the pound on Monday morning. We are likely to bobble around a little bit in currency markets earlier on this week, waiting in anticipation of the Reserve Bank official cash rate announcement on Thursday morning. We are predicting a 25-point increase to the OCR up to 3%. The market is also predicting a similar increase, and so any major deviation from this will see the currency move later on this week. US beef prices remained firm last week. Supplies coming from the traditional export markets like Australia and New Zealand have been particularly low into the US market this year. This has seen US cow prices rise significantly this season and has encouraged more farmers to kill breeding stock than typical. Already the beef cow kill is up about 13% on last year levels, and this will limit supplies in future years. Already the calf numbers are expected to be much lower over the next few seasons. In turn, this should keep the market pretty tight in the US and support prices being higher than average levels over the next few seasons. This should be good for the New Zealand industry over the medium term.